Stanley, a 1 lakh plus price, not a price, but a 1 lakh plus target for the sensex by the end of next year. Taking this conversation on the markets forward with Gautam Baid, the equity advisor at Complete Circle Stellar Wealth PMS, who's joining in now. Gautam, good morning. Thank you for joining in. You've mentioned the fact that the IPOs are sucking a lot of liquidity out of the market, but if the IPOs were not enough, now you're getting a lot more supply. As soon as earnings season is over, there is a flurry of block deals that have taken place, $1 billion on the first day itself. Are these two main factors acting as potential headwinds to prevent the market from not moving faster enough towards those record high levels?
Good morning, Hormuz. Good morning, Sonal. Thank you for having me on your show. And you're absolutely right. There's a flurry of activity in the primary market and in the block deal market, which is sucking out a lot of liquidity from the broader markets. And as a result, you're seeing the broader markets becoming very narrow. It's only a selective group of stocks which are getting handsomely rewarded. Those are the names with good earnings growth visibility and bullish management commentary. That was the trend in the most recent Q2 earnings. So this is increasingly becoming a market for active bottom-up stock pickers. However, the volatility in the markets could sharply pick up if any fresh geopolitical tensions arise after the recent Delhi terror attacks. And also, one thing to keep a close eye on is the yen carry trade, which can unwind globally because we are seeing a surge in the Japanese 10 and 20-year bond yields in the last few days. So that is a global macro item to keep a close track on.
So, Gautam, do you think it is not a domestic risk that the market is weighing, but it is something that could potentially happen globally? That is what the markets are factoring in right now?
I think it is not yet factored in by the markets. If it was factored in, then you would have seen the sharp uptick in the volatility index, the VIX, but that has not happened yet. I think markets generally fall on unknown shocks, not known or expected shocks. So if the magnitude of this yen carry unwind is far larger than what people are expecting, then we may see a sharp sell-off in the broader market, and that may provide good opportunities to add to your core holdings.
No, so what I meant to ask is, do you think there are more domestic risks that the market should be watching out for, or it's largely geopolitical or global that the markets are either expecting or could happen?
The latter, Sonal. I think the macro setup for India has never been better. You've already seen the latest CPI print, which was at a decadal low. So there's ample room for the RBI to pursue aggressive rate cuts. And along with that, we have had very good monsoons this year. And add to that, the big fiscal stimulus from the government through the income tax cuts in the budget and GST 2.0. I think a sector which has been underowned and underperformed for the last few years, that is urban and rural consumption, that may well be the theme of 2026.
I was reading through your stock recommendations, Gautam. One of them was Car Trade Tech, and that stock has been pretty much talked about almost every other day in the recent past, especially considering the reversal that it has seen from the lows that it made somewhere around 300, 350. Now the stock is 2000 plus. Do you still believe that there is still more upside that is left in a name that has moved from the lows in a pace at which Car Trade has?
Well, just to give a brief background about this company, Hormuz, Car Trade Tech is India's largest auto and classifieds platform, which offers discovery, remarketing, and value-added services. And the game changer for this business was the acquisition of OLX India, because that acquisition greatly boosted the listings density for Car Trade Tech, and it's driving lead generation in a very, very big way. More importantly, OLX India opened up scaled non-auto categories for car trade, including electronics and real estate. And this has greatly widened the monetization funnel for car trade without a commensurate step up in customer acquisition cost. The EBITDA margins of this business has been steadily inching up over the last 4 quarters, and we expect EBITDA margins to sustain at 30% plus, driven by two key factors. First one is operating leverage, because 95% of the traffic on car trade website is organic in nature. And number two, premium monetization through paid memberships, paid visibility, and cross-sell of finance, insurance, and logistics services. The key risks to the investment thesis for car trade are twofold. First is the cyclicality in used car demand. And the second risk in car trade is integration issues with a potentially large acquisition. in the future, because recently there were news in the media and Cartrade also confirmed the same, that they are in talks with Card Dekho for acquiring their auto classifieds business. So any potential integration issues there may dent margins of Cartrade.
All right. So, a lot of funds and a lot of other PMSs have also been looking at Cartrade Tech. But as you pointed out, there could still be some upside from these levels. The other one is Sensex Pharma, Gautam. We don't talk about this one so often. Why do you like this, and why not other generic names? Why are you so bullish on this one? And do you think, considering whatever is happening with the US in terms of tariffs and other geopolitical issues, the pharma space in general could be seeing a lot of risk?
I'll answer the first part of your question, Sonal. Sensex Pharma is the fastest growing name in the listed generics formulation space in India. The management has guided for 50% top line growth in FY26, the current financial year, and it has guided for 25 to 30% top line growth in the next 2 to 3 years after that, coupled with EBITDA margins in the range of 24 to 26%. This will be driven by operating leverage through the scale up of the new unit at its US facility, and also through the launch of higher margin CGT products. CGT stands for competitive generic therapy products, which enjoy a initial exclusivity period upon launch in the US. And finally, the company will also get backward integration benefits once the API plant in India becomes operational. As regards the Trump tariff issue, Trump has imposed tariffs and import duties on branded formulation imports, but this company is immune from those tariffs because it's in the export of generic formulations. However, the key risk to the investment thesis for this company is any potential non-compliance with the stringent US FDA regulations, because that may lead to an import alert and adversely impact the revenues of the business.
Gautam, you have mentioned about IPOs. You can't not help but ask you, any recent IPOs that you have looked at or you've been bullish on? There's been a whole host of big names, right? Grow, Physics Wala, Lenskart. Grow is almost unstoppable now, has almost doubled from its issue price. There is Urban Company. Any one of them that have been on your radar?
Well, Hormuz, rather than focusing on the primary markets, at Complete Circle's level PMS, we basically look for potential re-rating opportunities of a listed peer in the secondary markets. For instance, the Grow IPO has ignited a lot of buzz in the capital market stocks. So a lot of brokerage stocks, wealth management stocks, and other ancillary stocks are basically on our radar. I think generally in the past, when you have seen any large player getting listed at a very big premium valuation, then the market, then after the initial re-rating is done in the primary market, the market participants start looking for cheaper relative plays in the secondary market. So that is the area that we are focusing on.
All right, Gautam, thank you so much for joining in today and taking us through your specific picks or stocks that you're bullish on and overall market scenario as well. That's the word coming in from Gautam Baid. With that, we'll slip into a short break. When we come back, we'll focus on the crypto market with Manisha Gupta on the other side.